This stock could be one of the most attractive spin-off opportunities in the market today, Octave Intelligence. Despite operating in one of the fastest growing sectors, artificial intelligence, the stock has fallen sharply since it began trading. At first glance, that doesn't make sense. The company has solid financials, operates in an attractive industry, and appears to be trading below its intrinsic value. So why are investors selling it? And more importantly, how can you take advantage of this situation? The answer has less to do with the business itself and more to do with something that happens to many newly listed spin-offs. Before we continue, it's important to understand what a spin-off is. A spin-off occurs when a company separates one of its divisions into an independent company. Companies usually do this for two main reasons. First, the division may operate in a high-growth sector and deserve a higher valuation than it receives as part of a diversified parent company. Second, the business may have become strong enough to succeed on its own, giving management greater freedom over partnerships, operations, and long-term strategy. Octave appears to have been spun off from both of these reasons, which could make it a strong company trading at an attractive valuation. We've seen similar situations several times in recent years. DuPont spun off Qnity, allowing its semiconductor materials business to be valued independently as part of the AI supply chain. Likewise, Western Digital separates SanDisk, enabling investors to value it as a pure-play data storage company serving AI infrastructure. Both companies delivered outstanding short-term performance after becoming independent. While every spin-off is different, these examples show how a spin-off can create attractive opportunities when the market temporarily misprices them. On this channel, we analyze these opportunities before and after they begin trading. If you're interested in spin-off investing, don't forget to like the video and subscribe. Now let's continue. Octave Intelligence was spun off from Hexagon. While Hexagon combines hardware and software solutions for industrial applications, including sensors, measurement equipment, and positioning technologies, Octave is now a pure software company focused on critical infrastructure. Its software helps organizations design, build, operate, and protect factories, power grids, transportation networks, and public safety systems. As an independent company, Octave can now focus entirely on software and AI. That could allow the market to value it more like other AI software companies rather than as just one division inside a large industrial business. Octave entered the market with solid financials. The company generates about $1.5 billion in revenue and around $200 million in net income, resulting in a net profit margin of roughly 15%. Its balance sheet is also in a strong position, with about $4.7 billion in assets and only $1.5 billion in liabilities. At first glance, its profitability ratios don't seem particularly impressive. Return on assets is around 3%, while return on equity is also close to 3%. But there is an important accounting detail that changes the picture: goodwill. This is a common feature of many spin-offs. Because of goodwill, their financial statements can initially appear weaker than the underlying business actually is. As a result, the company can be more difficult to evaluate, and in some cases temporarily undervalued by the market. Let's see why. Octave carries around $6.2 billion in goodwill on its balance sheet. That represents the premium paid during acquisitions for assets such as customer relationships, brand value, and future growth expectations. Because goodwill inflates total assets, it makes profitability ratios look lower than they actually are. Once we adjust for goodwill, return on assets rises to roughly 7%, while return on equity increases to around 9%, both above industry averages. Goodwill also reduces reported earnings through amortization. After adjusting for those accounting effects, Octave's net margin rises to approximately 23%, significantly above the sector median. This is one reason many spin-offs initially appear less profitable than they really are. But that's not the only reason spin-off stocks can become undervalued even when the underlying business is strong. The biggest opportunity in spin-off investing usually doesn't come from the separation itself. It comes from what investors call the spin-off sell-off. When a spin-off begins trading, shareholders of the parent company automatically receive shares in the new company. However, many of those investors never wanted the spin-off stock in the first place. As a result, large institutional funds often sell their shares immediately because the new company no longer fits their investment strategy or portfolio requirements. This creates temporary selling pressure, pushing the stock below what it may actually be worth. Over time, as the forced selling fades and investors begin evaluating the company on its own fundamentals, the stock often recovers. That's where investors can find opportunities, and right now, Octave appears to be going through exactly that process. Since Octave began trading on May 22, 2026, the stock has fallen from about $22 to roughly $16, a decline of almost 30% in just 1 month. Octave is now trading at a much more attractive valuation. At approximately $16 per share, Octave trades at 18 times earnings. The average company in the sector trades closer to 28 times earnings. Even without any adjustments, that implies a potential upside of roughly 50% if Octave were valued in line with its peers. After adjusting earnings for goodwill-related amortization, its effective valuation falls to roughly 12 times earnings. Under that scenario, the potential upside increases to 130%. That represents a substantial discount relative to comparable companies. This undervaluation appears to be driven primarily by temporary selling pressure from former Hexagon shareholders. As mentioned earlier, many institutional investors sell these shares as soon as they receive them because the new company no longer fits their investment mandates. Eventually, that pressure disappears, allowing the stock to trade more closely in line with its underlying fundamentals. The challenge is that nobody knows exactly how long that process will take. No investment is without risk. Although Octave benefits from the long-term growth of artificial intelligence, that also makes the stock highly sensitive to changes in investor sentiment toward the AI sector. The company has also reported modest revenue growth in recent years, while net income has declined. Some of that may simply reflect accounting effects related to goodwill. However, the first quarterly earnings report as an independent company will be especially important, since it should provide a much clearer picture of the underlying business. Personally, I've already started building a position in Octave. If the spin-off sell-off continues pushing the stock lower while the fundamentals remain intact, I'll consider increasing my investment. In my opinion, Octave is a compelling spin-off opportunity. The company combines strong profitability, a healthy balance sheet, and exposure to one of the fastest growing technology markets. At the same time, the stock is still trading at a meaningful discount, likely because the spin-off sell-off hasn't fully played out. The biggest risk remains its exposure to AI market sentiment, and the need to confirm stronger growth in future earnings reports. We'll continue following Octave on this channel, along with other promising spin-off opportunities. If you're interested in finding these opportunities before the market fully recognizes them, consider subscribing. Thanks for watching, and I'll see you in the next video.